Hi everyone. Today, let's talk about my options portfolio. First, I will go over all of my positions on Robinhood. Then I will go over my positions on Tastyworks. Then I will go over some of the stocks that are currently giving me trouble, like Barrick Gold and Disney. If you want to learn about options and follow along with my portfolio, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at my positions on Robinhood, I have a credit spread on Apple that expires on the 16th. I am a little bit bearish on Apple in the short term, and it seems to be bouncing around right in this $115 share price. So we'll see how this one turns out. I may have to take it off for a small loss, but not a big deal. Looking at Simon Property Group, this stock has recovered quite dramatically, and this is turning into a very profitable trade. You can see here, it's almost at $400 profit. And I plan to take this off soon as it's only a $450 total credit. So once it gets down to about $50, I'll probably take this off and look for a new position. I have these covered calls here for Uber, still waiting to get out of this stock. It's down a little bit right now, but I'm not super concerned about it. I own shares and I want these shares to get taken. Looking at Facebook, altogether here, this is an iron condor. However, it is a bullish lean. So you can see here, the puts are in quite a bit of a profit and the calls are in a slight loss. That's because it does have that bullish lean. Facebook as a company is facing some pretty strong headwinds and it continues to bounce around. Looking at Uber, I did sell some additional puts to collect a little bit more credit because Uber has been pretty strong recently. Yeti, this is one of the stocks that was giving me some issues last week. However, it was recovered quite strongly in the last few days. GOLD, Barrick Gold. This is probably one of my worst positions right now at minus $75. Microsoft, I'm going to be bullish on Microsoft pretty much for the foreseeable future. It's been one of my core positions and I continue to take profits on that stock. CrowdStrike, again, another one of those core positions. It's up at $140 a share right now. You can see this contract is at almost $100 profit. I may take it off and look for a new position, but for right now, I think there's another $150 or so of credit left. I do have some Apple puts also. So as long as it maintains this $115 share price, I'll make profits on the downside as well as the upside. And then AMD, another great performer, continues to go up. And this is already in a $70 profit, even though the expiration is all the way out to November 20th. And then lastly here, you can see Uber stock is at $37.46. These are the shares that I plan to get taken by that covered call. I'm effectively selling the stock at $35 a share, so I'm not getting the max profit here, but that's a sacrifice I'm willing to make in order to protect my downside. Moving on to my Tastyworks portfolio. This is going to become my primary platform. I do like the tools and resources provided by Tastyworks. They allow me to make better decisions, and I want this to be my primary platform. I still may maintain Robinhood for certain trades, but Tastyworks is going to be my primary tool, and I always use Tastyworks research tools to make better decisions. Looking at my positions, I have a trade on Adobe, currently in $65 profit, Bank of America, $69 profit. This stock was giving me trouble, and I mentioned it in my last portfolio review. However, it's rallied pretty strongly, and it is coming up on earnings here in the next couple of days. Citigroup, I did add this position. It's already in a little bit of a profit. Looking at it here, you can see this is a short-term position, and that's because Citigroup does have earnings in the next week. CCL, they just announced earnings, and the stock basically didn't move, so you can see this is in a good position right now. Looking at Disney, this is one of the difficult ones. It was really coming down at my stock price pretty aggressively. It's since bounced a little bit since then and kind of stalled out, so I'll definitely have to keep an eye on this, and we'll look at the charts in a little bit. Looking at Ford, it's had quite the uptick recently, and I did sell some calls in here. These calls may become a problem, but Ford is not a very fast-moving stock, so I'll just have to keep an eye on it. 3M, another great position in my portfolio. It's been very strong, and I continue to make money here. Looking at Netflix, it has bounced back pretty strongly. Again, another profitable position. Pinterest is also doing well, already in a little bit of a profit just from a few days ago. Peloton has been on a tear recently. It's down a little bit today, so if you don't have a position, it might not be a bad time to get one. But just last week, this stock was at like $95 a share, and now it's up to almost $120 a share. In fact, after hours yesterday, it did touch 120, which is probably why it's down a little bit today. Looking at the Qs, this is a losing position right now because I had this call spread, which is getting threatened. It does expire in the next 8 days, but it's at $283 a share. And right now I'm just about $1.75 off of that. So there's a little bit of risk here. I did receive just over $150 credit. So my break even here is $284.50. So I do have a little bit of room here at expiration, but it's definitely threatening that position. Otherwise, you can see here I do have an iron condor, which is currently in a profit, but those losses on the call spread are currently eating almost all of this profit here. Snapchat, another very strong stock. I've had to roll up these puts and I rolled them out in time as well. S&P 500, this is an iron condor. Again, the call spread is getting threatened a little bit, but the puts are also in a profit pretty dramatically. And this is also a bullish lean. So because of that bullish lean, it's still in a profit even if these calls are getting threatened. Looking at Twitter here, this is a strangle. It's already in a little bit of a profit at $23 with a potential profit here of almost $200. And then lastly, I have Slack Technology. This has been a pretty good trade. I did trade it last cycle when it was on its lows and it did rally from there. So I did collect a pretty solid profit on that one. And then I rolled up these puts to collect more credit, and that's already in a profit here. So far, the last couple of weeks have been very profitable, but like I said, we do still have a couple of difficult trades with Disney and Barrick Gold. Looking at my actual position in Barrick Gold, you can see I sold the $28 puts and purchased the $23.50 puts. And for that, I received a credit of $70. So my break even is $27.30 here. Looking at this chart, I'm not sure quite how I received a $70 credit. I must have sold that basically at the lows. Since then, it's been above $70 basically for this entire trade, which is pretty unfortunate. The lesson here is that entering the trade at a good time is the easiest way to manage risk, and clearly I did not do that with this trade, and now I'm in a potentially losing position. The stock right now is at $27.13, which is below my break-even point, so even at expiration, if it expired right now, I would be in a losing position. I may have to roll this stock. We'll see what happens. I definitely have to keep an eye on it for now. Looking at the charts here for Barrick Gold, you can see it's been on quite the tear. These were the highs in February, and when every stock was hitting its lows in March, it was down around $15 a share. It very quickly retook those highs and then established this trend here between these 2 points. And since then, it's basically rode that trend line all the way up. And then we broke below it here. And since then, we've been going basically sideways. We're a little bit off of this 200 moving average down here and just below the 100 moving average. So this does look pretty bearish to me right now. Zooming in here, you can see we are just below that 100 moving average. And then taking a look here at the MACD, we are in a bearish position, but it seems to be leveling out at least a little bit. Relative strength is in the upward direction right now, but we haven't gotten into oversold territory quite yet. Looking at the 4-hour chart here, you can see that MACD is moving in the positive direction, but it is still negative overall, as well as that RSI coming in the positive direction as well. Overall, this stock is giving me quite a bit of trouble. However, if you didn't have a position in it right now, it's not a terrible time to sell puts. There is certainly a potential here for this to be a support level at $27 a share, and we could see some upward movement from here. But this is definitely a stock that I have to continue to pay attention to, and I may have to roll out in time. Moving on to Disney here, it's quite a different story. We have the highs in February, and we haven't seen those highs in quite a while. You can see the overall high was around $145 a share, and right now it's hovering right around $123 per share. And the reason for that is pretty obvious in the Rona. The Rona has really impacted their revenue pretty significantly, and the stock price is basically surviving on Disney+. Looking at the charting here a little bit closer, as you can see, it's basically been riding this trend line. It established pretty early here, and then it retested it several times and bounced up. And then again, recently in the middle of September, around the same time as Barrick Gold, it actually broke below those trend lines. And again, zooming in here, you can see we're bouncing right around that 100 and 200 day moving averages. Disney does look a little bit better than Barrick Gold did. Looking at the MACD, it is trending in the right direction. And we are seeing a stabilization in RSI with a potential upswing here, I think. We didn't hit completely oversold territory, which to me is pretty bullish. This position is in a little bit better shape overall. You can see the stock price is at $123 here, and my break even is at $119 per share, well below those moving averages. And that's because I took this position when the stock was already down, which, as I mentioned before, allowed me to manage my risk much better. If I had sold options in this higher level, then I would definitely be underwater here. But since I waited for the stock to come down a little bit, I do have a much better protected position. Looking at the S&P 500 here, something that's always good to keep in mind is most stocks generally move in the direction of the market unless they're facing some pretty difficult headwinds or they got some really good news when the market is going down. So looking at the charts here, again, pretty solid uptrend, which we broke through in September. And then we created a small downtrend channel, which if you've been watching my videos, I thought this was going to hold at least a little bit longer until we retested this 200-day moving average, but it didn't quite work out that way. We did uptrend, and then we came down a little bit, didn't quite retest here, and then we've uptrended since then. And since the market is uptrending a little bit right here, and it's starting to gain a little bit of momentum here on the MACD as well, that makes me overall less concerned for some of those positions that may be in a little bit of trouble. In the future, I do plan to go over how I select my positions, so make sure you like and subscribe so you don't miss any of that content. Comment down below what you think of any of my positions. Are you bullish or bearish on any of those stocks? Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.